everyone, I am Dr. Namita Mishra, faculty MBA from Tecnia Institute of Advanced Studies, going to deliver a lecture on balance sheet. First of all, we will know what a balance sheet is and why it is prepared and what are the different assets and liabilities that is used for the preparing the balance sheet. A balance sheet is a position statement that reflects the financial position of a business for a specific period of time. The balance sheet is prepared by tabulating the assets and the liabilities on a specific date at the end of the accounting period. Now, let us know the different types of assets. So, now I am going to explain what an asset is. Assets are the resources for the business. It can be categorized as fixed asset. So, what is a fixed asset? Fixed assets are purchased in the current year and benefit of that will be derived for several future years. So, these are used to earn profit not only in current year, but also in the next coming years. However, it also depends upon the lifespan and the utility of the assets. Further, fixed asset may be tangible or intangible. For example, plant and machinery, land and building, furniture and fixture are the example of the few fixed asset. So, what are the intangible asset? The things that is not seeable, that has values, that are the intangible asset, like franchise and like the patent rights. These are the intangible asset. Now, I will explain you what is a current asset. The assets which are liquid and easily available to discharge current liability of the company is called a current asset. For example, cash at bank, stock, sundry debtors are the current assets. Now, we know what is a fictitious asset. Accumulated losses and expenses which are not actually or any virtual asset called as a fictitious asset. Discount on issue of shares, profit and loss account and capitalized expenditure for time being are the main example of the fictitious assets. Now students, I am going to explain you cash and cash equivalents. What is it? Cash balance and cash at bank securities which are redeemable in next 3 months are called as cash and cash equivalents. Now, we know what is a vesting asset. The assets which are reduced or adjusted in value because of their use are called vesting asset, for example, mines, quarries, etc. Now, we know what is a account receivable. The bills receivable and sundry debtors comes under the category of account receivable. Now, student, I am going to explain you working capital. Difference between the current assets and the current liabilities are called working capital. Now, we will discuss the liabilities. So, what is a liability? A liability is the obligation of a business or company arises because of the past transactions or events. It is settlement or repayment is expected to company and meet out from the liquid asset. These are two major types of liabilities. Current liability, the liabilities which are expected to be liquidated by the end of current year are called current liabilities. For example, taxes, accounts payable, wages, partial payment of long-term loan, etc. Then we know long-term liability. The liabilities which are expected to be liquidated in more than a year are called as long-term liability. For example, mortgages, long-term loan, long-term bonds, pension, obligation, etc. So, now I am going to explain you the methods of preparing the balance sheet. There are two methods to prepare the balance sheet, that is as per the group of assets and liability. First one is in order of liquidity. In this case, the assets and liabilities are arranged according to their liquidity is called marshalling. And second one is in order of permanency of the assets and liability. In this case, order of the arrangement of the assets and liabilities are reverse arch followed in the order of liquidity. I hope you understand the lecture and the following references are used for preparing the lecture. Thank you very much for watching the video.